Futures trading involves substantial risk of loss and may not be suitable for all investors. Good afternoon, this is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago yet again. Today is Monday, October 6th, a bit of a ho-hum day in the agricultural space, more so on the grain side of things. Livestock, we saw a little bit more in terms of fireworks. We'll get to that in a minute though. Before we get started, I do want to remind you, if you've not signed up for a free trial of our daily commodity commentary or a demo of our trading platform, Blue Line Edge, which we'll be highlighting today, head over to bluelinefutures.com. From there, you can get all that information delivered right to your inbox in a demo for the desktop and mobile trading platform. If you have any questions while you're going over that demo, please don't hesitate to reach out to our trade desk. We are ready, willing, and able to help. It is very user-friendly. It is not intimidating. So again, I suggest trying that out. Get comfortable with it while the markets are quiet. And that way, when things do get a little bit more exciting, you'll be able to feel confident and ready to rock and roll when things are really moving on the ag side of things and the grain side of things specifically. Now that we got that out of the way, we can go ahead and get into some of today's charts. Got the corn market pulled up here and started off a little weaker, firmed up a little bit in the early morning trade, lost some ground, gained some ground back. Again, kind of a ho-hum day in the corn market as we remain basically wedged between the 50-day moving average, this red line here, that comes in at 414.5, and then resistance above the market. We've got the 20-day moving average and 100-day. That's the blue line and purple line there. That comes in from about 420 to 424. The bulls want to see consecutive closes out above this pocket to really encourage that next leg higher and potentially retest those highs from late last month, as well as that gap that remains partially open from July, and that comes in 430 to 433. Until we see a breakdown back below the 50-day moving average, I think the bulls have a little bit of an advantage here, but again, temper the expectations. Not a whole lot of new news to move this market, especially with the government shutdown, not getting a lot of the reports that we would typically get. We did get export inspections, though, this morning. That was in line with expectations across the board, corn, soybeans, and wheat. We will not get crop progress after the close today. Now moving over to soybeans, a little bit of a different technical setup on this front. We got back to that cluster of major moving averages on Friday and really just stalled there. And a lot of times when you see major moving averages, in this case we've got the 20, the 50, the 100, and 200 day all coming in from about 1022 to 1029. It almost becomes self-fulfilling and a barrier of resistance, which has proven to be true this time around so far. I think the bears have a little bit of an advantage in this chart until we can see consecutive closes out above there. The big wild card or ace in the hole would be potential developments with regards to trade with China. I don't know that we're going to get a whole lot more in terms of substance within the next couple of weeks, but U.S. President Trump and President Xi Jinping are expected to meet in the next few weeks. Potentially something comes to that, maybe something doesn't, but until then, I think that probably keeps us in a little bit of a trading range until we get that new news to give us a new direction other than sideways, which, as you can see here on the chart, that's really what we've been in throughout the year, is mostly sideways. And this we've got the Fibonacci retracement levels pulled up here. The 50% retracement, or basically middle of the range from this year's trading range, is 1022. That's basically right where we're at. So not a whole lot going on there. Funds have been very indecisive, and soybeans not establishing a big net long or a big net short position. Just waiting for more news. Hopefully we get more news in the next few weeks. Moving over to the livestock side of things real quick. We've got December live cattle futures pulled up here. Last week was mostly consolidation mode for the livestock market, and this morning's livestock roundup that we send out each and every morning, we talked about the consolidation, building up energy, potentially for a bigger directional move. A breakout above last week's high end of the range or low end of the range could potentially spark that bigger directional move. Today we did get a breakout above the top end of last week's range, as well as a 20-day moving average. If the market can maintain that strength through tomorrow morning, I wouldn't be surprised to see that propel futures back towards trend line resistance here, which is this red line, and that comes in a couple bucks above the market. So the bulls have the advantage to start the week. Let's see if they can't kind of feed on it and fuel the momentum that we saw in today's trade. What would negate today's strength would be a breakdown back below the 20-day moving average, that purple line, and then kind of I guess the panic button would be a break below trendline support. It doesn't look like we are at risk of doing that here at any point soon, but things do change quickly in these markets, so always got to be paying attention on where those levels come in at. Lastly, got a minute here, lean hogs, December futures. This is an interesting chart. We've tested and held the 50-day moving average a couple times over the last 3 sessions. And again, smack dab in the middle of the 20 and 50-day moving averages. And if you've been watching these videos for the last couple weeks, that has been a common theme for a lot of commodity markets. And again, it almost becomes self-fulfilling. Break back above the 20-day puts the bulls back into control, but right now the bears have the technical advantage. If we do fail at last week's low and the 50-day moving average, look for that 100-day moving average of the blue line there to be the next line in the sand for support. That comes in near 84.40, and we have not seen 2 consecutive closes below that since February of this year. So those are some of the things we're looking at to start the week. If you have any questions at all, again, please don't hesitate to reach out. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.